is where the heart is, and my heart is anywhere you are, anywhere.
Good morning. Welcome to Home is Where the Heart is, where mortgage meets ministry. I'm your host, Craig Schweiger. This is our 6th episode. Home is Where the Heart is, where mortgage meets ministry, is about helping seniors understand these reverse mortgages that we keep hearing about, giving them facts about them, dispelling some of the myths, and helping them make a good decision as to whether a reverse mortgage is right for them. This is a special show today because our first 5 shows included a guest. We welcomed 3 members from the staff at Light of Life and talked about their relocation and providing a new home for the homeless on Pittsburgh's North Side. And 2 subsequent shows spoke about another ministry, well, actually 2 other ministries from Pittsburgh. One is the Silver Ring Thing, which is internationally known, founded by Denny Patton. And the second one is a ministry that was birthed out of the Silver Ring Thing called Unaltered at last week's show. We have some upcoming shows where we'll welcome Ligonier Camp and Conference Center, which is a 100-year-old, I hate to say camp because it's more than a camp. It's a really special camp, but it's also retreat and year-round lodging in the Laurel Mountains, right outside of Ligonier. So we'll talk about their plans to expand the lodge. We also are excited to promote Urban Impact, which is a ministry on Pittsburgh's North Side to support the youth in that community. Well, today's different, as I said, because we don't have a ministry guest. We're going to dedicate this show completely to reverse mortgages. Many have asked if we could spend a little bit more time on the reverse mortgages and try to provide more information. And so that's what we're going to do today. Again, my name is Craig Schweiger. This is Home is Where the Heart is, sponsored by Federated Reverse Mortgage. Our phone number is 412-866-HOME. I'm going to try to cover a lot today about the benefits, the costs, and also the considerations that those looking at a reverse mortgage should be aware of. But, there's always more questions. So I encourage people to contact me directly, either by phone or you can email me, craig@fedreverse.com. We also have a website, federatedreversemortgage.com. That's www.federatedreversemortgage.com. I'll give you my contact info a little later in the show, but to begin, I'll talk about the benefits. You hear so much about the benefits, almost so much I've heard these seem too good to be true. So I won't just stop at the benefits. I'll also reveal some of the costs and considerations and things that someone would need in order to make an informed decision about whether they want a reverse mortgage. So as it relates to the benefits, the primary benefit is for a senior that has equity in their home, they can secure a reverse mortgage and take advantage of that available equity that they have in their home. It always takes a formula that includes their age and the value of the property to determine how much equity they currently have and how much they can access. Rule of thumb is roughly 50 to 60% of your equity is available to you because the bank and the government that insures these loans wants to make sure that you always have equity at any given time in the future. So the question is how best can seniors take advantage of this equity that they have? Well, the first thing to ask yourself is, for a senior that has a mortgage, is currently making payments on a first mortgage, maybe even a first and a second mortgage, and it's just become a bit of a nuisance because as their income may have gone down or has become fixed, they still have to make these mortgage payments. And the benefit of a reverse mortgage is that and it's not just a benefit, but it's a requirement, any mortgages against your home have to be paid with the reverse mortgage. So I mentioned about this is accessing the equity, and also the secondary benefit is there are no payments required to be made on a reverse mortgage. So by paying off any liens against the home, a first, maybe even a first and a second mortgage, one of the immediate benefits is you will stop making payments on that mortgage. So that helps cash flow if, in fact, that's one of the goals for a senior looking at a reverse mortgage, is to help just monthly cash flow. Just recently working with some clients that are on Social Security, and they live in a very nice house and they want to continue to live in that very nice house. So their goal is to pay off their mortgage that happens to have a $2,000 payment, and the ability to eliminate that payment is increasing their cash flow by $2,000 a month and will allow them to live more comfortably in their home. The second benefit of using that equity is any loans outside of your mortgage. You take a new reverse mortgage and pay off that mortgage that you currently have. You also can pay off some other debts that may be out there that you just haven't been able to pay off because of a fixed or reduced income. So there's two other benefits besides just what we'll put together as debt consolidation. Debt consolidation reduces your current payments and really eliminates them because the new payments aren't required. The second two things is, we'll go with the first one, receiving supplemental income. And I'm always very careful to define, I call it supplemental income because it's money coming in on a monthly basis, but you really need to think of it as taking a mini loan every month. So I explain it that way because on a typical mortgage, when a mortgage payment comes due, you have to write a check for it. But with a reverse mortgage, instead of writing that check, they just increase your loan amount by the amount of that payment. So there's nothing magical about it. It's just the math behind it and the equity and the appreciation that can be expected with today's low interest rates allows you to increase that amount of debt and not make a mortgage payment. So how do you do that? Well, same thing. We use a calculation that we put your age, the age of the youngest borrower. And by the way, seniors must be 62 years or older. The youngest borrower is less than 62. There are ways to secure a mortgage with a married couple and still allow the younger borrower to be an owner of the property and remain in the property long term or forever. So once we enter your age and the value of the property, and the value will be validated through an appraisal, that's going to tell us how much, we'll call this supplemental income, you're able to receive from your reverse mortgage. And part of that is letting the system know, well, I want to get income for the next 5 years, or I want to get income for the next 10 years, or any term. Or there's an option where you can make the request for show the borrower how much they can receive monthly for the rest of their life, regardless of how long they live. I always find that to be very interesting. So we talked about debt consolidation. We talked about income from your current mortgage. The last is what I believe is very important for a senior that potentially has prepared well for retirement, has good income, good savings and reserves. And this is where we'll have financial planners often refer borrowers, and it is to access the equity in your home just with a line of credit, which means there's X amount of dollars that will be available to you at your disposal. The timing is completely up to you. And these dollars are available for a multiple number of reasons. You can use these dollars to repair your home. You can put an addition on your home, maintain your home. You can also use those dollars down the road for things like vacation, golf membership. These things that sometimes seniors find that they're not earning the kind of money they'd earned before, so they just can't live as comfortably as they like, but they have all this equity in their home. So that's a very popular reason to secure a reverse mortgage. The other prudent reason for having a reverse mortgage with a line of credit is for a senior that has worked hard to create a very good retirement strategy, which includes, financial planners call them sometimes buckets, where they can pull money from. So there's fixed income, things like Social Security and pension, but there's other income that comes from 401k, retirement income, simple savings that has been accumulated and invested in the stock market through mutual funds or bonds. And having a reverse mortgage and the ability to access another bucket of money allows for those times during maybe a downturn in the market. There's been several years in the past 10 that the stock market is low. And it's very hard for seniors during those years to pull dollars out of the stock market, because you might have an account that was worth $80,000 at the beginning of the year, and by the end of the year, without pulling anything out of it, it's down to $50,000 or $60,000. A good investor knows that that's often not the time to liquidate your savings. Stock market goes through many peaks and valleys, sort of like a roller coaster, but course of history has always trended upward. So wise investors and those that have worked hard for their retirement can pull from this available equity in their home during those times that they don't want to liquidate stocks that have been depleted or gone down in price. So that is a summary of the benefits. I do want to take some time to get into other costs and considerations, things that our team make sure that all seniors and their advisors and their heirs or anyone they rely on for input or influence in their decisions to understand. So if you just joined us, my name is Craig Schweiger. You're listening to Home is Where the Heart Is. It's a program to help seniors understand the benefits and costs and considerations about reverse mortgages. And our goal is to make sure that seniors can make an informed decision. And if staying in their home is optimal and the right thing for them, we want to provide a way to make that possible. My phone number for additional questions is 412-866-HOME. I can be reached via email, craig@fedreverse.com, or always feel free to visit our website, www.federatedreversemortgage.com. So let's get into the costs of a reverse mortgage. I'll often bring this up in a conversation with a senior early on because I believe that a reverse mortgage is expensive. I have originated forward mortgages for many years, and mortgages in general can be expensive, but reverse mortgages cost a bit more, and I'll explain why. But before I do that, I'll also mention that although they're expensive, they're about half the cost of selling your home. So if your choice is, I'm going to have to sell my home because I can't afford it, I can't keep it up, I'm going to sell and downsize, well, you'll pay more to sell your home just in real estate commissions and transfer taxes than you will for a reverse mortgage. You'll pay about twice as much. But that said, I still want people to know that they're expensive. So primarily, the biggest expense for a reverse mortgage is what makes reverse mortgages possible, and that is the insurance. HECM reverse mortgages, which are by far the most popular, are insured by the FHA, HUD. When I say insured, what I mean is the available equity that we just spoke about as being a benefit is at the beginning of the process determined by putting a senior's age and the value of the property into the computer program to establish how much equity they have and how much equity they have access to. Well, there's an available amount of equity that is retained in the property, which is still the owner's equity. Above and beyond, even if they maxed out the amount of funds they wanted to receive at the closing, there's still equity. And the insurance is in place to make sure that the lender that provides these funds will always, any time in the future, whether a senior decides they want to move from their home or if they stay in their home for their entire lives and their heirs are selling their home in an estate situation, that insurance makes sure that there's always enough equity to pay off the debt, which is really a good thing in that a senior's future estate will never be negatively impacted if they maxed out the amount of equity they utilized, and if their home didn't appreciate as much as expected, and if they lived a lot longer than expected. There'll never be a time that at the sale of their home, upon moving or upon death, will they not have enough money to pay off the entire debt. So to continue on costs, besides just that insurance, there are closing costs. A senior has to pay a $125 up front because before you can even get the process started, you will have to take part in a counseling session with an independent FHA approved counselor. I think that is normally done between 30 and 45 minutes, but it does cost $125. A senior also has to pay for the appraisal on their home, and prices for appraisals differ from region to region. I would figure about $500 for the cost of the appraisal. The other cost that I like to bring awareness to is the fact that a senior's loan will grow if they decide not to make payments, which is one of the primary reasons why you take a reverse mortgage. So the senior has to be aware, as I said about the benefits, that one benefit is you're not making payments. A cost, and we're going to go into concerns next, one of the initial concerns is that loan will grow. Well, fortunately, most of us live in areas where your home value increases too. So the analysis that I've looked at, although the loans have grown in size because the senior didn't make payments, their equity stays consistent. So now that we've discussed both the benefits and the costs for a reverse mortgage, we're going to go into some final considerations that a senior might use when evaluating whether a reverse mortgage is right for them. If you're joining us, this is Home is Where the Heart Is. My name is Craig Schweiger, and our show is sponsored by Federated Reverse Mortgage. I can be reached directly at 412-866-HOME. Email me at craig@fedreverse.com and our website, www.federatedreversemortgage.com. I'll often ask seniors what their intention is for equity that they have in their home. I don't want to go to the assumption all seniors believe I've worked hard to pay off my mortgage and I own my home free and clear and I just don't want to have a mortgage payment, or I'm preserving this equity for my children, my grandchildren. Past shows we've even talked about the idea of leaving a bequest in a senior's estate to help some of the ministries that we've talked about and maybe other nonprofits. I don't want to make an assumption that that's what they're thinking. I always ask the question because I want to honor their interest. It's their equity and it's their right to use that equity however they desire. I would have them consider whether you want to help or access any of that equity now to do some of those things that otherwise you couldn't do until either you sell your home or after you're passing through your estate. So that's something that I'm going to want to find out about and try to honor their wants and needs. So for instance, if a senior says, I have this equity, I have 4 children, the age, they have some major expenses coming up, college, wedding for their children, I'd like to see this money assist them for those kind of things. Or I have a very special charity that given to monthly and I've left X amount of dollars in my will and estate for that charity. It's worth considering that you can access that equity now while you're alive and still benefit those people and organizations that are near and dear to your heart. I can talk more about that if you call me. I'd also like to know from a senior what your intention is as far as how long do you plan to be in this home? For instance, a senior may say, we only intend to be in this home another 2 or 3 years. That's a 2-story and or looking to go to a patio home. And if I know that information, I can help them in their decisions. In that example I just gave, I would probably advise that senior not to get a reverse mortgage right now. But I can also educate that senior to know that when it comes time to purchase that next home, a reverse mortgage might be right at that point. This is a real life example. Seniors are living in 2 stories right now. The prices of homes have gone up. They're interested in downsizing. But often what they'll find out is that 2-story home that they may be able to sell for $350,000 is not enough money to get them into the patio home that they desire. Patio homes are a relatively new phenomena, maintenance free. You have an association, 1 story, no basement, generally a flat lot. Very good for seniors. The reality is, depending on where you live, but in our area in Pittsburgh, those homes can often cost $600,000 plus dollars. And so a reverse mortgage can be used in that scenario where if a senior sells their home and does not have enough money to purchase this $600,000 plus dollar home, they can put the money they have down, and that's their equity. Take a reverse mortgage for the difference, and it works like the other reverse mortgage on a home that you own. You won't be required to make mortgage payments on that. Now, a consideration is, and this is whether you're taking a reverse mortgage for your existing home as a refinance or purchasing a new home, you do have to have the financial capacity to continue to pay your taxes and your insurance on the home. Purchase use of a reverse mortgage is relatively new. When I started looking at these over 20 years ago, that wasn't an option. So that's something that is worth researching, understanding, and seeing if that's right for the senior. The next consideration that I'll go into, and from my understanding, many companies don't get too deep into the conversations about, like any mortgage, there's an interest rate. It's important to get as low an interest rate as possible. It's also worth looking at whether a variable rate or a fixed rate is best for you. And so I like to talk about that. Rates are very low right now. It makes these reverse mortgages even more attractive. There are programs that don't allow fixed rate. So I'll immediately want a senior to understand that if this is a program they're looking at, but it doesn't come in a fixed rate, that they need to consider that. The point I'm trying to make is I'm going to try to bring forth questions for seniors that they or maybe even their advisors hadn't considered asking, and talk about what are the pros and cons, what are the upsides, why is this something you should be concerned about. And I'll go into the final, what I'll call consideration, and that is when a senior is looking for a reverse mortgage. I've already talked about the need for an appraisal and the need to pay for that up front along with the counseling. I did want to touch on costs. All costs, and I'm talking about the insurance and the other costs, can all be financed into the loan. Even that appraisal cost and that counseling fee can get reimbursed to the senior at the closing. So it isn't a case where you'll go into this and it'll deplete your savings any further. And generally, seniors have access to either getting X amount of dollars at closing or setting up a line of credit where they can access more liquidity from their equity in their home. But I want to talk about the condition of a senior's home. Often, reverse mortgages are for seniors that are getting a bit behind on care for their home. Repairs, maintenance, all these things have become more and more expensive. And it's like anything, priorities. You do what's most necessary, and some of the things that if you don't have the money at the time, you have to wait. And often with maintenance and repairs of homes, by waiting, they can often get worse. And that means they become more expensive. Prior to closing on a reverse mortgage, there could be some things identified in the appraisal report through the inspection that need to be fixed on the home. A senior needs to be aware that the condition of their home will be a consideration, and there could be a list of repairs needed. I'll leave with one final. Here so many times, is the government or is the bank, are they going to own my home? The simple answer is no. Just like a forward mortgage, there will be a lender that has a lien on your home, which in some regard they have an interest in the real estate up to the amount of their loan. And yes, as we discussed, if payments are made, that interest will grow. But I made it very clear that a senior will never be required to leave their home as long as they meet the basic conditions that I discussed: paying your taxes, paying for your insurance. So in closing, I want to thank you all for taking the time. My name is Craig Schweiger. This show is Home is Where the Heart Is. Please contact us. I'm sure there are many questions. You can reach me at 412-866-HOME or email me, craig@fedreverse.com. Thanks very much. Enjoy the rest of your Saturday, and God bless.
Home is where the heart is, and my heart is anywhere you are, anywhere you are is home.